Okay, so welcome back again. So for this video I'll be doing individual stocks analysis, right? I have like sort of like a quarterly review of what they are doing, because for these individual stocks I usually use a higher time frame chart, right? Because in the lower time frames there are too much gaps, right? So kind of makes it hard for me to pinpoint a certain level, which is also why I use only the monthly chart and the weekly chart for the analysis. So right here we have Tesla. We have equal highs above, but at the same time right now we are in the equilibrium, right? I'm not sure if price is going to offer a premium, but it has already been offered right here. So if Tesla is to remain bearish, okay, I would not like to see price trade above this bearish balance price range here, right? As you can see, these two levels were used as support previously, right? Right here, new highs, right here, retracements. So once it closes below and trades away from it, I expect this area to act as resistance. Right here we have a small little CB right here which has been filled. So right now I'm looking to see if we get downsides into these levels right here. We have 84 and 67 on the weekly chart. Okay, there's huge gaps right here, unfilled ones. Okay, and I think on the monthly chart it's cleaner right here. We do have gaps right here as well, right, all the way into this monthly order block, and from there maybe we can get some sort of retracements from these levels here. Okay, so this is for Tesla. Let's go for what's the next popular stock. I'm just gonna go through a few. How about Alibaba? Right, so on the weekly chart we can see that price fails to make a higher high before a strong retracement down, right? So it stopped right around at the rejection block. So if price was to break down this swing low here with a of course a strong momentum or some sort of fair value gaps, CBs, right, then I think we are looking for this level right here and below it, right? We have relative equal lows right here, or sort of like just a few cents away, equal lows right here. So I think this would be the next level price would like to attack. So for Alibaba, I'm looking at prices below 57.2, and I would like to see what happens after that, right? It might offer a turtle soup setup, but I'll just have to wait for the shift in market structure, right? It's better not to blindly long below these levels here, because you do not know how far it's going to reach. Okay, so yeah, if it was to trade it back up like right here, because we sort of rebalance, not rebalance but repriced all these gaps here, so there's still a chance that it might want to offer a run on these liquidities right here into this bearish CB right here, right? We have this untapped CB right here, and it is also within the breaker. So this would be a optimal setup for shorts, but it seems weak, okay, at this very moment. So let's just see how it plays out for Alibaba. But ultimately I I'll be waiting for below 57.20. Right, on a monthly chart, we have these levels here as well. So not too sure if it's going to reach up into this level, but it doesn't have the need. I mean, it doesn't need to do that because price has already been repriced to the level once, and it's enough. So price should not or need not come back into this level again to go lower. Okay, we can see that relative equal highs have been engineered over here. So maybe once we get the liquidity attacked, it might want to revert back up into this relative equal highs, and those will be the targets for longs. Okay, but that is way into the future, so I'm not gonna anticipate that for now. Okay, so on the overall on Alibaba, if I were just to use, let's say, a weekly range here, okay, because I want to measure where the bottom will be. So below this relative equal lows, we have 20 bucks, 20.58 right here, 20.58, right, and let's do purple and bold. I want it bold. Okay, this is the one standard deviation from this measuring range right here. Okay, so let's see if this plays out. It would be so, I mean, like, how do you say it? It would be so magical if this plays out. Okay, so my best low, okay, best measuring range low, 20.58. okay, you want to mark these levels as well, because I think it's gonna attack these lows here, and once it attacks this low, I want to see if it expands into this 20.58 level. Okay, that would be interesting to watch. On the monthly, if I were to use the monthly range, right, half of the deviation would be 35. So we have two levels here, 35 and 20. Let's go on to the weekly. I'll do one more line, 35 right here, 35. Oops, it's 35. Yep, so that would be interesting to watch if we get down to these levels and do some sort of V-shaped recovery, or if you want to call it that way. For me, it would be like a reversal. So I would like to see this high stay intact, right? Not, I mean, like, I'd like to see it leave the highs here like this, right? It would be almost perfect for a turtle soup reversal. Okay, and right, let's move on. What else? I'll do just one more. How about what's the best stock or the most? Okay, Facebook. I think that's interesting. I don't know. Facebook. Wait, no analysis here. Okay, let's skip this. What else have I said? Should I pick a US stock or a China stock? Let me think. Let me run through the charts in my brain real quick. What's the most common stock that everybody knows? How about Amazon? Amazon. Okay. Let's take a look at the monthly. Okay, monthly we do have the charts here. Okay, so for Amazon, I'm looking at these levels here, 63 and 54. Right here we have a balanced price range, right? The price we traced from this area before, and right here we have a huge bearish order block. We have this CB right here as well. So I do not want to see price trade above this fair value gap, right? Swing high to swing low. Way below that, alright, even if I use this, it's just right at equilibrium. So it looks super bearish if it was not to offer a premium before breakdown. So let's go on the weekly chart. I think it's clean here. Okay, we have this relative equal lows right here. I mean, not relative, but almost equal, okay? And below we have this small little gap. And right below that we have another relative equal lows here. Okay, so these are the two levels I'm looking for Amazon, 81 and 63. Right, we punched up into this area here, almost hitting the mean threshold of this bearish order block. Was not able to close above or within this CB right here. Signals super bearish prices. Even took out swing low right here. So this volume imbalance should act as an entry point to take out this relative equal lows right here, 81.30. Okay, overall I'm looking at this CB right here. Exactly. Okay, so why these levels? Because it was used to send the price higher before. Okay, let's just do a dotted line right here and draw it in blue. So as you can see, price offered a buy here and made all-time highs and continue to spool higher. Okay, so this right now has become a balanced price range. So it came down below here, similar to Tesla, came down below, have a strong retracement up but fails to make a higher high, breaks down again, trading away from this balanced price range. So price, if it was to come up into this range here, expect resistance. So we got this, and right now it's breaking down. So next target's 81.30. That is for sure. I think it's gonna take that out. Right below we have this relative equal lows. Not sure if it's gonna take this out, but highly likely, because on the monthly chart we do have the same level here as well, and this is a unfilled BC right here. Okay, right below that we also have an unfilled BC, but right here there is some bullish order blocks. Okay, so I think this level could it's either the price is going to run through this level, or it's going to offer some form of weak retracement and it's going to punch it back down again. Okay, so that is what I'm looking at for Amazon. Overall target, I think 63.30 a good chance, 54 maybe, and on a weekly chart 81, that's for sure. Okay, let's see this impulse. Oops, can't seem to find it. Okay, right. Okay, maybe. Okay, we need to note these levels. 77.14. Oops. 14. Let's make it bold as well, but in red. Okay, and we have here 54. That is 2 standard deviations. 54.84. 54.84. Okay, one standard deviation, half, 1.5 deviations right here. Okay, so what I'm expecting is, if price is going to take out this low, I would like to see if price is able to reach into this level. Okay, similar to Alibaba. Let's see if we can find a temporary bottom at 77.4, or if the price is super weak and it wants to take out this, I mean super bearish, not weak, super bearish, and if it wants to take out this relative equal lows, I think it can reach as deep as 54.84. right? I'm just going to leave it here, and we'll see in, I think, about 2-3 months time again for next quarter, right? I'm updating this because I did this during December, so from December to March it's around 3 months. So right now I'm giving an update. Okay, and the monthly chart that you saw, this was drawn in December, I think December or January, right? Let's see. Yeah, I think December right here, because we have this is the month of December, and yeah, I think it was drawn here because we had this shift lower and this CB created. Okay, well, let's see how this plays out. So far so good. Okay, and yeah, I think that's it for my updates. So we've covered 3 stocks today: Tesla, Alibaba, and Amazon. And we will come back again for the next update, or once one of the targets have been met, right? And that's all. Alright, I'll give you the reason why I'm doing this. Okay, the main reason why I'm doing this is to prove that fundamentals does not matter. Even though your so-called company is doing things, you have your evaluations, all that amount of bullshit is useless. All you need to do is to understand the chart and understand where the money is. Okay, if you think about it this way, prices has been raging upwards, so where's the bulk of the liquidity? Don't tell me it's above this level here, right? It's definitely below. We have huge liquidity pools below that has been accumulated over so many years. So the bulk of the money is down here. If you are the market maker and you want to take liquidity from the people who invested or who play this game, okay, you're most likely going to seek the place whereby there is more liquidity as compared to the other side. So within the stock market, there's only 2 sides you can be. You can either be long, and you can either be long or short. So right now, liquidity favors the shorts. Okay, because we have lots of liquidities on the longs. Okay, we have long-term positions, even long-term stock investors, they have all their liquidities down here. So most of the times the market maker is going to reach into those liquidities and take it from them. So that's how I perceive it, and no amount of fundamentals can help you, because all they need is to engineer one black swan event, and that's it. Your stocks, your companies are all done, right? They can't do anything. Like if they were to engineer some sort of a war, or let's say for example another pandemic, then do you think your companies are going to survive? Do you think the fundamentals are not, are gonna allow the company to pull through? Very unlikely. Okay, and that's it for this video. I'll see you guys again.